Well, if you have a variable home loan rate, it might be time to consider signing up for a fixed rate or start stashing away some extra cash at least. While nothing is certain in this very fluid world of finance, it does seem almost inevitable that interest rates will start rising by the end of the year. And with so many Aussies locking in their rates, it's those who've stayed variable that will cop it. Weekend Sunrise money man Scotty Phillips from the Motley Fool is here. Good morning to you, Scott. So Wall Street pretty much expecting American interest rates will go up from March, and aggressively too. What's the reason there?
Yeah, good morning. That's exactly the story, and it comes down to inflation. In the US, they've had 7% inflation. Imagine that, something that cost $100 a year ago, $107 today. Or worse, if you had $100 back then, you can only buy $93 worth of stuff with it now. So it really is a big deal, and no one likes to pay more for their mortgage, of course, but it also means if we don't have rates go up and inflation come down, that'll be the one that gets you rather than those mortgage rates themselves.
Okay, so what do you think will happen? I think you said, look, you're expecting that interest rates will go up sometime this year. Will they take it easy on variable home loan rates?
I hope so. It's going to be an open question. It really does come down to our local inflation, because we're combating the same sorts of issues. Not the same size of inflation rate, but there's going to be the same pressures here at home as they're facing in the US. The RBA doesn't want to move until wages go up, but I don't think they're going to have that choice, unfortunately. We don't expect to see wages go up anytime soon, at least not by a lot. And so they're probably going to have to move if prices do. That probably means late in the year. Some people are saying as early as March, by the way, but I think it's probably going to be August, maybe November. Maybe one small rate to start with, maybe a couple back to back. But yeah, now is a good time to think about what you might do. As you mentioned, stash some cash away or potentially look at a fixed rate loan.
Okay, it's not too late then to switch over to a fixed loan rate?
We've been saying for a little while that I think people should have been doing that. So hopefully if you've been paying attention, you would have done it maybe 3 or 6 months ago. But no, I do think you should have a look now. There's reasons why you mightn't. If you want the flexibility, if you want an offset, you want to do other things, there can be a good reason to stay with a variable rate. But if you can get a good fixed rate for 2, 3 or 5 years and it suits your lifestyle and employment circumstances, I really would think about it, because it is going to be a case of rising rates. If you can lock in a rate now, you know exactly what you're going to be paying if you fix.
Okay, what would you consider to be a good fixed rate?
Gee, it depends on the circumstances, Mon, unfortunately. It depends how much money you've got, whether it's an investment property, lots of bits and pieces moving around now. But if you can get something under about 3.5% for, say, 5 years, that's a pretty good start. The further you go out, the more you're going to pay. But on the flip side, the longer you get to lock your rate in if rates continue to rise. And I do think once they start going up, the RBA is going to keep moving them in that upward direction, probably for a little while to come. So if you're going to fix, do it soon-ish, as long as it suits your circumstances, as long as you get a good rate.
Okay, I just want to ask you before you go about this possible standoff, or this standoff that's happening between Russia and Ukraine. I mean, a shot is yet to be fired between the two of them, although our share market took a massive hit this last week. Are there particular sectors that are most likely to be hit if that ends in armed conflict?
Yeah, it's going to be really hard. Look, across the board, quite honestly, because it's going to hit confidence more than anything. It is going to hit profits. So if you think about businesses that are relying on things like, again, unfortunately, tourism and transport, that's going to hurt. On the flip side, should do well. Energy stocks will do well, because there is a massive gas pipeline from Russia through to Europe, and that will be hurt as well. So there's going to be puts and takes, but the most important thing is probably to stay the course, because these things, unfortunately, as serious as they seem now, these things do pass.
Yeah, okay. Good advice, as always. Scott Phillips, thank you so much.
Thanks,
Happy
Mon.
Sunday to you.
Bye, mate.
Here's Barrett's.